Aloha folks, welcome to another video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 3 great dividend companies that, in my opinion, when things like these days where market is choppy and looks like there's about to be a crash, these are 3 great companies that you want to invest on, in my opinion, and you want to put these in your watch list because these are solid companies that have great dividends as well as great balance sheets. As always, please remember that this is not financial advice. I'm not a financial advisor. So for those of you that are new to the channel, just wanted to say aloha, welcome. Hopefully at the end of this video you'll hit that subscribe button. If you do, that'll be so awesome. Also hit that notification bell so you don't miss out on some of these great companies that we look at. With that said, let's take a look at these 3 companies. First on the list is none other than Apple. Ticker symbol is AAPL. I definitely use a lot of Apple products. Definitely actually in this computer that I'm recording is an Apple product, so I definitely use a lot of their products. That's something that I am really excited and really invested on. So if we look at Simply Safe Dividend, based on their dividend safety score, they rated as 99, which is very safe. The dividend yield is 0.51. Market cap is about 2.8 trillion, which is a mega cap. Now looking down at the key metrics, you can see payout ratio is 14%, which is very low for most companies. Forward payout ratio is about 14%. Dividend streak 9 years. So if you go down to the dividend growth, last 5 years is 9%, which is very fast. The latest 7%, which is average. Uninterrupted dividend streak of 9 years without a reduction, and it's been growing for the past 9 years. If you look at the payment details, you're getting paid quarterly in the months of February, May, August, and November, with the annual payout of 88 cents. So the ex-dividend date is today. So for those of you that have invested on, you're eventually going to get your payout on February 10th. Now looking down for more of these financials, you can see free cash flow. Look at that. And then if we look down to the sales, you can see the sales have been in the trillions, the billions. Return on invested capital, look at that, 60%. Return on equity is 146%. Now if we go to tip ranks, at the time of this video, it's at 172. Their analysis rating is a strong buy based on 29 ratings. You got 24 buys, 5 holds. Their price target is 192 with 11% upside. 12-month forecast rated as a high of 215. 192 is the average and 161 is the low. Now if we go to Webull, based on their analysis, there's about 44 of them. They rated as buy as well. 52% said is a buy. Strong buy is about 31%. Then you got your hold 15%. Now looking at the price target, pretty similar, about 215. 190 is the average, 160 is the low. Now if we switch to CNN Business, kind of get an idea of what they're also forecasting. In the high of 215, the medium of 191, and the low of 54, with analysis recommendations of 28 buys, 6 outperform, 9 holds, and 1 underperform. Now if we take a look at Simply Wall Street, looking at their share price versus fair value, based on their analysis, they rated this as a 5% undervalued. So pretty good considering Apple is a solid company. Now if you look at the company overview, you can see proven track record with mediocre balance sheet. I really like Apple. I think this is, for me, this is a staple in my portfolio. Now if we go to Robinhood, you can see based on Robinhood, for the week it is up 5%. For the month it's down negative 4%. 3 months, it's up 14%. You got your 1 year, it's up 27%. The 5 years, it's up 476%. So I do hold a small share. I hold about 35. My average loss is 138. So my total return has been 20. I'm up 26%. So I definitely want to start putting more of this. So my goal is to continue to make probably 100, 300. I want to continue to build this to maybe 1,000 shares. This will be one of the pillars or the solid foundation in my portfolio. So definitely going to start adding more when it dips, or even close to about anytime it dips. I think, in my opinion, Apple is a bargain. Next on the list, Johnson & Johnson. Ticker symbol is J&J. This is a company that engages in research and development, manufactures and sales of healthcare products. In my opinion, this is one of these solid, great companies that you definitely want to have this in your portfolio. I believe, in my opinion, everybody uses some sort of Johnson & Johnson products, whether it is at home, whether it is in the companies or in the hospital. Definitely Johnson & Johnson has that product in there. Now, if we go to simply say dividend, based on the dividend safety score, they rate it as very safe, which is 99. Dividend yield is 2.45. Market cap is 455 billion, which is a mega cap. Going down to the key metrics, you can see payout ratio is about 42. Forward pay ratio is about 40%. Now, if you look down over here, dividend growth the last 20 years, 9%. The last 5 years, 6%. The latest is 5%. Now, check this out. Wow, look at that upward trend. And then more importantly, look at this. 59 years without a reduction. 59 years of consecutive increases. That is just amazing how they've continued to give dividends and increase the dividends for the past 59 years. So solid company, in my opinion. Your payout date details would be quarterly in the months of March, June, September, and December. Annual payout is about $4.24. Ex-dividend date is February 14, and then you get your payout on March 8. Now, if you go to tip ranks, at the time of this video, it is at 172. The analysis rating is a moderate buy. Based on 10 analysis, you got 7 buys, 3 holds. The price target is about 186 with an 8% upside. Now, if you look at the high price target is about 215, average is 186, and the low is 163. Going to Webull, based on 19 analysis, they rated as a buy. You got 36%, strong buy is about 26%, and then you got your hold, which is 36%. Now, if we go down to the price target, again, kind of pretty similar to the rest of them. 215 is high, the average is 186, and then the low is 163. Now, so we switch to CNN Business, you can see high is 215, medium is 180, and then the low is 163, with the analysis recommendations of 7 buy, 8 outperforming, 10 hold. Now, going to Simply Wall Street, based on their share price and fair value, actually Johnson & Johnson is 37% undervalued, which is pretty amazing in my opinion, because Johnson & Johnson is a solid company. So their fair value rated as 278, currently is about 172. Now if we switch to Robinhood, for the week is up 1%, for the month it's up again 1%, 3 months it's up 4%, for the year it's up 7%, 5 years it's up 52%. So I do have a very small percentage. I only hold about 3. Again, total return is only 8%. Again, this is one company that I'm definitely going to start putting more shares in there. My My goal for this one is to maybe to get at least 1,000 shares. But you know, Johnson & Johnson is doesn't really get that much dip, so it's kind of hard. You know, I'm trying to average cause it as best I can, but I'm definitely gonna add more when I see it dip. So finally, last on the list, Coca-Cola company. Ticker symbol is KO. This is a company that engages in marketing and sales of non-alcoholic beverages. So if you look at the brands, you can see it's not only about drinking beverages. There's tons of different types of products that Coca-Cola manufactures. So one of my favorite companies actually to invest on. Now if we go to Simply Safe Dividends, based on their dividend safety score, they rate it as 80, which is safe. Dividend yield is 2.73. Market cap is 266. If you look at the key metrics, 71% is the payout ratio, which is pretty high. And then you have your dividend growth. Last 20 years, it's 8%. Last 5 years, 4%. Again, look at that. Upward trend, definitely like seeing that. Uninterrupted dividend streaks of 58 years without a reduction. Consecutive 58 years of continued increase of dividend growth. So again, another solid company. Payout details, you get it quarterly, April, July, October, and December. Annual payout is $1.68, and then your ex-dividend date is November 30th, which is passed, and you get your payout, which is December 15th. Going along to tip ranks, they rated a strong buy, 8 buys, 2 holds. Price target is about 64 with a 4% upside. High would be 70, average of 64, and then your low of 55. Now if we go to Webull, pretty similar. You got buy 5%, strong buy 17%. Then you got your 27% hold. Price target, they rated as a high of 70, average of 63, and the low of 58. Going to CNN Business, it's pretty similar. 70 is the high, 63 is the medium. Payout is 58, and then your analysis recommendations are 15 buy, 4 up, 4 and 9 holds. Now let's take a look at Simply Wall Street. Based on their valuation, they have it as overvalued. Currently, at the time of this video, it is 61, but fair value is about 58. So you're pretty much getting a pretty good price for Coca-Cola. So now if we go to Robinhood, you can see for the week we're up, it's up 4%. Month is up 2%. 3 months is up 10%. For the year, 26%. 5 years, it's up 50%. Now my average cost is about 53. I have about 102 shares. Total return is about 14%. Again, so my goal would be probably get to 1,000 shares. Got a long way to go, but you know, slowly buy here and there. So all right, so we're definitely gonna definitely check out these 3. Also, have time, check me out on Instagram, Mr. Dividend Investor. Follow me, definitely check that out as well. Alright guys, thank you so much for watching. Hope you like this video. Give it a thumbs up. As always, please remember, stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.